Oh, okay. We have Abby, Tumbi, Bukola, Bimi on the call already. That's it for Evelyn. Then we wait for Captain. And who else? Wait for. Hopefully they will join us shortly. So we can get started, guys. This is 9:07. Let us give them all another 5 minutes. I'm trying to get it to everyone, so everybody can join the call. So let's just give them a few more minutes. Mapalaji has joined us. Let's just wait a little more. Okay, Bukola is here. Okay. So we have Evelyn, we have Mobalaji, we have Amy, we have MJ, we have Tumbi, Abby. Right. I think we are almost good to go. Just a second, guys. 9 people, and 6 are here, remaining 3. Okay, so 7, 3, 4. Yeah, okay. Please, guys, we are waiting for 2 more people. 2 more people. Let's give them 5 minutes. I'm trying to reach them, so in 5 minutes time we'll get started. Good evening, everyone. So the last person is joining us in about a minute. So how has it been? How was your week? And hope you guys have been able to go through the video. So let me start with Abe. Abe, please, can you unmute yourself?
Yeah, bro, I'm here.
All right, bro. What's happening now?
I'm good.
All right. So
Yeah.
basically, yeah, before I even ask you what I want to ask you, everybody's on the call right now. So I need us to understand something. I could have taken this mentorship class as an individual thing, but let me tell you something, a little history into what actually helped me grow faster. So when yes, I've always been a solo runner. I've been learning on my own and doing so much on my own. But after leaving my first academy, then joining another academy, I took my time to keep working on myself. But I realized working alone is really, really stressful. So I joined this small group of about 13 people. About six were not active, about seven were not active, just about six of us were active. So six of us every day we go on Zoom calls, we bounce ideas, we bring whatever our private mentors from left, right has been giving us. We bounce ideas, we share it, we talk, we discuss. And what have we been able to accomplish in the last 3 to 6 months that we've been doing things together? We've become friends apart from analyzing together. We've become a support system to one another. And trust me, let me say I want to analyze now and I'm feeling there's this block. I can't really see what the market is saying. All I need to do is just go to the group. What's up now? Who is free? Please, guys, let's come on Zoom, please. Just now to let's look at the market together. Then we go into the market, we start looking. I might see something, they will see something different. We bounce the ideas, we try to verify which is actually the best before we conclude on jumping into a trade. That is one of the things that has actually changed my game and their whole trading as a whole. So guys, that is why I actually brought you guys together as a group. Not because I can't teach you independent separately. Worst case scenario, I'll record the video, then I'll send it to each and every one of you separately. Watch it, come back for your questions, and I can go on 30 minutes with you, explain again whatever you don't understand. But guys, this group, please, I need you guys to start communicating with each other. When you have questions, ask on the group. You can yes, you can still ask me some things in my DM personally, call me. And as I said before, each and every one of you in that group, you can call me 24/7, even at 4 a.m. in the morning. Anytime you can call me. It is my duty, it is my job to make sure I pick your calls or reply your messages. If I don't get it on time, I will definitely return it when I see it. So please don't see that group as a placeholder or somewhere I just choose to put you guys. Please, guys, it's for each and every one of us to be able to grow. So that said and done, let us move to the next thing. So Abe, how has it been? Did you go through the video I sent to the group?
Yes, I did.
So do you understand everything that was said in it, and did you practice?
Yeah, I understand some, and I'm still having problem with many things. So I think with times I'll be able to know and understand many things about this forex.
Okay, then good. So
Yeah, it's not something I can just understand in a day.
yes,
Yeah.
perfect. And as I said earlier on, what actually helped me accelerate my transition into chart pattern trading is because I have in-depth knowledge of Tradingview as a whole from the beginning, because I've been taking trades on my own since day 5 of my trading. I've been going into the chart trying to see when I was giving signal. Anytime I was giving signal, I'll go to the chart, try and look at try to find out why they want to sell or buy. I might come to a very rash conclusion or whatnot, but at the end of the day, I go used to the chart. The more time you spend with the chart, treat the chart as a partner. The more time you spend with the chart, the more you get involved with the chart, the more you guys blend in, and the more you become one with the chart. So that is that for you not understanding everything. The more you practice, the more you understand. So Adetumbi, how have you been? How is everything? How is work? How is because we need to make sure everybody's mindset is intact before we move on. So do you have anything you want to ask regarding the last class, or do you have anything you want to say?
No, actually, thank you for the video. Sorry, I haven't actually, to be honest. I didn't get the chance to watch the video.
Oh,
It's one of
wow.
sorry, it's
but
one of sorry. Go ahead. Sorry, you wanted
but
to.
you understand what I taught you guys on in the class, yeah?
Yes. That's why I can't miss a class because
All
I'm
right,
a very visual person. I have to be in the class and
all
I have
right,
to hear you talk in
all
the
right.
class and then I remember it. But I haven't had time to watch the video. It's one of the things that I was
Yeah, it's
going to
fine.
do
It's fine.
this
As long
evening?
as, yes, as long as you understand,
Yes, I do.
yes, the video will be there, and every class will be added to the playlist, which everyone on this call we have access to. You can always go back to any of the classes and check whatever is in it. So that is that. So today we are still continuing on B. Please, do you have
Yeah.
anything to say? How is
I
it?
know.
You watch the video? Did you practice?
I didn't finish watching the video, but I did practice as far as I went with the video. Like I looked through the trading view and tried to look at all the panels, the top, the right and left, and did all my like favoriting and all of that. So I was able to do that, but I didn't finish the video, but I did understand the.
All right, that is amazing. The most important thing is you made an attempt, and forex trading is not a sprint. It is a marathon. Even me, I still have a lot of challenges and I still have a lot of things I'm still trying to learn every day. If I share my screen with you, I have so many books I'm trying to read. Piece there over this weekend, as short as it is. I went for a shoot in the morning. I'm here taking a class. I've been reading before this class. Tomorrow I'll repeat the same circle. So I know we all have our busy schedule and our lives, family and everything. But please, forex trading will actually change the game for you, to change your life for good. The money you can make in trading in a month might be equal to salary you've made in 2-3 years put together. So that is it. Okay.
Okay. Also, can you just like slowly show us? Because I tried using the pause. That's one of the tools, and I don't know why I'm just stuck on it. Like it would just go the arrow up and down, and then it doesn't go the third way. You know, it has three.
Yes. So you can even draw a path into 1 million waves or whatever, how many points you want to create with that. So don't worry. In today's class, I will show you guys practically how to use these tools as we go into the chart patterns one by one. All right. So Bukola, how are you, Bukola?
Hi, I'm fine. Thank you.
All right. So did you go through the video and did you practice?
Okay, so I was part of the last class and I could understand most of the things you were talking about. So
Okay,
I didn't
good.
really go back. Yeah.
Because I know you are even a pro from time, so you're a pro from time. You just want to get better. All right, so thank you. All right, so Evelyn, any new thing? Evelyn.
Yeah, hello.
Hello, Evelyn.
I can hear you.
All right.
Yeah, I went through it.
Okay, and have you started using those tools?
Yes, I practiced.
All right, good. Game me, and Mobolaji. What's up, guys? Do you have any question regarding any of those tools, and did you watch the video? How is it going?
This year. I already get it.
Okay, perfect. All right. Okay. Captain Oriel Fair, good evening. Are you there? Mambolaji, are you also there? Okay, Captain, go ahead.
Good evening, Coach.
Good evening.
Yes, I watched the video. That has been my challenge from the academy, but I really thank you for the video. I know how to use Tradingview now, but I've not really practiced. You know, I told you I'm not on my system that I'll be on the move. So from next week, I'll be able to practice.
Yes, I understand. So, and everything, yes, I know by now many things will be in perspective. If you can't, if you can't use TradingView on the computer, if you don't have access to your laptop right now, you can just practice with your phone. I have 2 videos on my YouTube channel. You can check it out.
Yes, I have them. I have them.
Oh, great. How to use TradingView on Android and on iOS. All right, so Mambolaji, I don't know why Mambolaji is not talking to us. Maybe she's fighting us.
Coach.
Okay, at last. What's up now?
Good evening. Hello.
Hello, I'm here. I can hear you properly. So what's happening now?
Good evening.
Yeah, good evening.
Yeah, good.
I know you already.
Oh, well, we're fine.
Before, but at least the new tools. You can't tell me there's nothing new in that video.
Yes, because prior to the video, I had little knowledge about TradingView and everything, but I was able to watch the video today, and I would like to say thank you, because you've opened my eyes to some other things that I had no idea of. And I know from now on, I can also do better with the Tradingview. I can do more things than I used to. So I just want to say thank you for sharing that video with us. Thank you so much.
You're welcome. You're welcome. All right. 10 people. Okay, good. All right. So guys, don't let me waste your time. I believe the little exercise we've been able to do, I'm just trying to create a simple relationship between you guys. Try, everybody should hear each other's voice. So by that, we are bridging the gap one after the other. So today, basically, what we'll be doing is we'll be running over every chart pattern, or let me say the major chart patterns that we have. So just a second, we run over the major chart patterns. Then if we are not tired and if there's still time, if you feel we should go on, then we can go into the first one and start looking into it. I believe that is okay by you guys. All right then. So in a minute, I'll share my screen with you so you can actually see what I'm doing. So pending the time, I'm still using a slide from someone else, but in about a week or thereabouts, my graphic designer will be able to finish work on my own slide. So it will be better and well detailed than this one I want to use. But anyway, the point is, let's just get straight to why we are here today. And we can always finesse whatever is remaining over time. So I'm still going to probably make this whole thing into a course without anybody being online, video course, where you also have access to it on the website. And you can always go back to it and watch it anytime, any day for live. So that is another thing I'm also working on. So, okay, let me share my screen. I have my slide open. And I might be a little bit draggy and a bit slow. I apologize ahead because I've been shooting all day and I'm literally exhausted. All right, guys. So I believe you can all see my screen now. If you can see my screen, please drop 2 in the chat box. If you can see my screen. Oh, perfect. That's amazing. So this should actually read Advanced Charts and Technical Analysis. Introduction to Chart Patterns. Module 2, Introduction to Chart Patterns. That is what we are actually going to treat today. Pardon the slide, but nonetheless, let's move on. So there are 2 different categories. No, actually there are 3, but over time you get to understand why there are 3. There are some chart patterns that they can be a reversal chart pattern or also a continuation pattern. So in that kind of scenario, all you have to do is you prepare for the break to any side. So as chart pattern traders, all we'll be doing is we are going to trap price with the chart pattern. We draw the chart pattern, we will trap price. So when the pattern breaks out, then we'll be able to follow wherever the pattern breaks out to, and we keep moving. And what does this help us do? It gives us a very tight stop loss. Every chart pattern has a measured stop, and if price can break that stop, that chart pattern is over. You have to start reanalyzing. And this is why when chart patterns fails and we hit stop loss, you don't need to panic, because obviously price action trading, naked trading, you have to fail some. It has to happen. There's no how, there's nothing you can do until maybe later you become an expert, a guru, over 3 years, 4 years. And as I'm speaking to you now, there's no one on this call with 2 years experience. So you have to have traded for 3 years to 5 years before you get to this level where you only fail maybe once in 50 times. So let's go on. So we have 2 major patterns. Yes, different categories we'll be talking about. The first one is the reversal patterns, and the second one is the continuation patterns. I hope you guys are taking notes, and please do not hesitate. After the class, immediately after that, tomorrow, anytime, any day, anytime, any day, any minute, you can always message me to ask me a question. Maybe you are practicing on your own, or you are trying to do something and you are stuck. Just message me or call me. I will reply you and answer you. All right, let's go on. So the first one out of the reversal pattern is head and shoulder. Head and shoulders. So there's this pattern. Why it's called head and shoulder is that it has, you will see it, you will spot the head in the middle. You know, your head is taller than your shoulders, your left and right shoulders. Pardon me, guys. Your head is taller than your left and right shoulders. So we have the head in the middle. We have the shoulder, the left shoulder. We have the right shoulder. When you spot this pattern, then you know head and shoulders is always a bullish reversal pattern. You know what we mean. We know what we mean when we say bullish and bearish. Bullish means a buy and uptrend. Bearish means a down or a sell trend. So when you see head and shoulders, it is actually telling you the market will reverse and buy from the shoulder neckline. So it will buy. So the inverted head and shoulder, when you hear anything inverted, it means opposites. Opposites. It is inverted. It has been flipped. So there are some patterns that are not listed here, which we'll still get to talk about later on, but they are very rare patterns, and I don't want you to start focusing on those ones for now. You get to know them over time. So the inverted head and shoulder, that means the head is upside down, like you are turning upside down, then the shoulder too is also turning upside down. Then we have the triple top. When you see the inverted head and shoulder, you know the market is reversing for a sell. So when you see the triple top too, you'll be able to spot the pattern tool and all those other tools play a major role in this. You will see when we start putting it into practice now. So triple top, you will see three triangles, forming three triangles at the top, or whatever is forming. You'll be able to spot price action hitting hitting the resistance at three times at almost the same spot. I will show you an example as we proceed. Then this one is telling you price is reversing. Triple bottom is inverted, opposites is the same thing. Double top, instead of three tops on the resistance, you have two tops on the resistance. And for the double bottom, you have two touches on the support. So let's go to the continuation patterns. Out of the, if I'm going too fast, guys, do not hesitate to unmute yourself and let me know, please, if I'm going too fast. Thank you. So continuation pattern, we have symmetrical triangles. Symmetrical, what is a symmetry? Symmetry is like, okay, the human body now, if you put a line through the middle of the nose, through the middle of the eyes and middle of the lips, straight down, you'll be dividing the body into two equal halves. Symmetry is when what is on the left is replicating exactly or close to 98% of what is on the right, or vice versa. Symmetry is when you're splitting one thing into two and you're getting the same split image. So that is symmetry. Symmetry can be used in so many things. So symmetrical triangle is an equal length triangle. I will show you guys what that means. This is a continuation pattern. If market is going downward, it will continue downward. But sometimes symmetrical triangles can also be a reversal pattern. But in that case now, what I choose to do is when patterns that should be a continuation pattern is reversing, I stay away from the markets. When a pattern that should be a reversal pattern is continuing, I stay away from the markets. I don't run after trades. And personally, and that is what I'm trying to also incorporate into the trading group, I don't need to take 12 trades in a day, 14 trades in a day. You will take 15 trades in a day. I'll take just 3 trades and I'll still catch more pips than you. All your 12 trades might end up giving you maybe 120 pips total or 80 something pips in total. And I can take just UK 100 and GJ, take EN or EU, And at the end of the day, sometimes last week, there was a day we made over 700 pips, close to 1,000 pips in a single day. And we've had weeks where we've made over 800 pips in all. We've made over 1,000 pips in all. So I don't believe in trade quantity. I believe in trade quality. And this will even give you the time to be able to trade with peace of mind. When I have just 3 trades open or 2 trades open, and I know it's just 2 trades, I have peace of mind. I'm not running after these charts. I'm not looking at these news, looking at that one. All I need to concentrate on is I'm in UK, I'm in AN, I'm in UJ. There are 3 distinct trades in 3 different countries. I just watch the news for these 3 important currencies, and I have peace of mind. I set my alerts. We'll still talk about alerts when we talk about when we get to the point where we'll be talking about entry and exit strategies. We'll talk about alerts. You can write that down, guys, in case I forget. We'll still talk about alerts. We talk about volume. Volume is literally one of the few indicators. I know, yes, I said we'll not be using indicators, but before you can get a full grasp of what the chart is actually really saying, before you can actually understand candles big time, pending the time, when we finish all this, I will teach you 1 or 2 indicators, not to give you your trade setup, but just for you to consider in verifying your entry and exits. I believe you should understand what I'm trying to say. You've already seen your trade setup. You just want to know when is the right time to go in. So that is it, guys. All right. So we have ascending triangles. As it says, as the name implies, the triangle is ascending, is going up. Triangle is going up. Then we have descending triangles. The triangle is coming down. They are both continuation patterns. We have bullish flags, we have bearish flags. And please write this down. We have pennants, we have wedges, we have teacups and inverted teacup. Pennants.
Can you repeat?
Pennants.
How do you spell that, sir?
Pennant. Pennants.
Pennants, okay.
Pennants. Pennants. We have wedges. 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 We have teacup and handle, or simply teacup, and we have the inverted teacup. So yes, those are the major ones. I'm not saying there are not, there are still some other chart patterns like the harmonics patterns. We are not even touching harmonics right now because we have butterfly, we have gatley, we have crab, we have shark, we have deep crab, we have and so on and so forth. But harmonics pattern will be later on after we are done entirely with chart patterns. Though harmonics pattern is still classified as chart patterns, but it is a standalone category. So because it's actually deeper than chart patterns, it has to do with a lot of numbers, calculations, and so many. Has to do with precision. So, all right, let's go on. So, reversal patterns. Let's look at this chart, which will go into Tradingview and practicalize right now. But right now, I just want you guys to focus. Let's focus. So this is head and shoulders. Head and shoulders. Don't try jotting anything down. Or if you want to jot it down, just make it brief. This is just explanation. We still go for practicals, and you can write down if you think you can concentrate. So, all right. So as you can see the representation with candles. Then you can see the representation with a drawing. You can see the representation with a drawing. Look at this head. It is taller than this left shoulder, this right shoulder. And one more thing, the left shoulder and the right shoulder doesn't necessarily have to be on the same length. But looking at this now, it looks close, it looks perfect. So that is it. The most important thing when you are considering your entry is your neckline. You can see this neckline right here, neckline. You can see it through here too. Neckline is basically like a trend line. to establish the trend, like a support, a diagonal support, and sometimes it can be an horizontal flat support. So just watch out for the neckline, and we'll still talk about these guys. I need you to also put this down. We'll be talking about wicks. We'll be talking about volume. We'll be talking about wicks. Please, wicks are very, 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 very dangerous. You can see this drawing of the neckline. It was not drawn through any wick. Right here, the first touch, the second touch, you can see it is distinctly standing below the wicks. In anything you are drawing, please do not manage drawings. Do not just say, let's walk over. No, you don't walk over patterns. You don't force patterns. If you can't establish a trend, then there is no trend. If you can't establish a clean line, there's no clean line. If you can't establish a shape, you don't have that shape. So please have that at the back of your mind. Do not force any drawing. If it's not actually meaningful, then it's not meaningful. All right. So you can see the neckline right here. So you see where the entry actually is. The price came down. Most times you have to expect a retest. So whenever it retests, it has to come back to that neckline. So once it crosses the neckline up, you just set a sell. See this sell limit now. I will not put my own sell here because it can give me a fake out with a wick. So what I will do is I'll put it somewhere around there, close to the like 50% of the retracement. This is the retracement right here. So 50% will be like half of it. And I'll show you guys how to measure percentage with the Fibonacci tool. So let me write that down too. We'll treat Fibonacci as a different class too. Fibs, okay. We treat that as a class. All right, guys. So I will actually put my sell stop 50% of the reversal. Then once price starts dropping and it gets to this place, it will activate my entry. And that is heads and shoulders for you guys. You can see how simple this is. No indicator, nothing. It's just for you to spot the pattern. And I'll give you guys a trick into how I trap price and I spot patterns. So let's say, for instance, I've seen this left shoulder, then I've seen this head form. I've seen this retracement starting. It has gotten to this point. I will just draw down. I'll use part 2 to draw down heads and shoulders. Then I'll set alert at every important point. I will show you guys that as we proceed. So I'll put alert at every important point. So I can go, I can do whatever else I want to do, whatever I want to do. So when price actually forms that heads and shoulders successfully, I have a trade. Yes, it's not easy to see the patterns clearly, but you know, just like a mother, where you give birth to a child, you don't understand what the baby wants. They cry, they do this, they do that. But over time, you understand what the baby wants at every single time, no matter how much, even when you're stressed or you're not even paying attention, you know what your child needs at every given time. So that is the thing about chart patterns. The more time you spend with chart patterns, with the chart, the more you understand. There are days where I'll just wake up. I'm being honest with you totally. Sometimes myself and my team, you guys know some of them, Dr. Jesse and Kenny, Derek. So we'll be on Zoom from around 11 at night, or sometimes as far back as 9 p.m., 8 p.m. We'll be on Zoom all through the night till maybe 3 a.m. And the thing is, we have different time zones. We are in different time zones. So we'll be on Zoom till about 3 a.m. Then we'll go and sleep. First thing, 7 a.m., some of us are up again. We're analyzing again, reassessing the market against London session, because that's literally the only session I trade now, against London session. So we'll have actually sharp price in different currencies. That is why when we see a trade setup, it's actually almost good all the time, because we've gone through it, we've analyzed it before going to bed. When we wake up again, we ask ourselves, is this thing still going in our direction? We don't have a bias, whether to buy or sell. We just want it to play out. So we map out every possibilities. So that is it, guys. Over time, you get used to seeing the chart pattern. That is that for heads and shoulders. So the same thing with inverted heads and shoulders. You can see it's just like the screen has been flipped. So look at the retest right here. The left shoulder, the head, the right shoulder. See the neckline. See the neckline. If you notice something, most of the time, in a downtrend, the trend line, we establish a downtrend. Sorry, we establish something like an uptrend before it reverses. I don't know if you get that. The trend, you can see the trend line. This is creating higher highs, but eventually, we are going for a sell. We are going for a sell. Look at this now. The trend line is creating a lower low, and we are even still going for a sell. And okay, before we go on, I want to give you a little trick. Yes, it's just a price action, one of so many price action strategies, but it works a lot, at least 70% to 75%. Look at this right now. Look at this trend line. When you establish a first touch on the trend line, you establish a second touch on the trend line, and you are able to establish a third touch on that trend line. Trust me, if it's a downtrend, 85% of the time, that will still sell. If it's an uptrend, 85% of the time, it will still buy. But how do you take your profits? Look at this touch. See the previous low. That's where you put your take profit. When you sell from here, you put your take profit here. That is, I don't know if you guys can remember, on Friday, yesterday, we entered a GU trade. It's actually a stop loss. Immediately, I gave another entry for a sell. And we're able to, if actually we took our profit and we didn't wait for the reversal or whatever, or whoever has closed when they noticed the reversal, we're still able to go into about 45 pips profit. But TP1 was 25 pips profit. Some people went out at 25 pips outrightly, but for those who waited, they must have gotten between 30 to 40 pips. So instantly, because I saw this formation, it was a third distinct touch on the trend line that I've actually established. So before you start drawing your chart patterns, you need to establish the trend. Put that down, please, before you actually go ahead. And Evelyn, you said it's always hard to see the chart patterns. Yes, it is. But if you can actually establish the trend, establish support and resistance, and all those things first, easily, just maybe, you'll be able to spot the pattern easily. All right, so let's go on.
Can you repeat what you said? You said something about before establishing.
I said before you think of establishing a chart pattern, you need to actually establish what the market is doing. You need to establish the support and resistance. You need to establish all the possible trend lines you are seeing. All the possible trends you are seeing, you need to establish it. You need to actually establish it. If you understand triangles, assuming you understand triangles, you'll be able to see that even these heads and shoulders, as these inverted heads and shoulders, is actually forming a triangle. Look at this. If I establish a trend line right here, this is forming a rectangle. This is a descending triangle rather. This is an ascending triangle. But the fact that this wasn't really coming from a downtrend, coming upwards, it is not giving us a continuation pattern. Looking at this now, you know if it's a triangle, it should be a continuation pattern. But the price was coming from up, is reversing. You can't expect that to still buy back. It has to sell if it wants to play out as a triangle, and it won't have given you this shape at all. So that is one of the importance of seeing the clear trend and seeing support and resistance. So I will show you all this thing in practice. Don't let it overwhelm you. All right. So speaking of triple top, you can establish that, write that down as a different topic. All these chart patterns, I want you to treat them as individual topics, because with time, what you now start doing is you just go on Google, you go on YouTube, you start looking into triple tops alone. You can spend a day or two just looking at triple tops, everything different people, different traders and educators have said about triple tops, different possibilities, different scenarios, what can actually play out, how to protect yourself and all those things. With time, that is what you need to focus on and do. All right. Anyway, so look at this now. Look at this. Triple top, you can see we have the first top, which is the peak, touching the top of the rectangle. We have the second peak, and we have the third peak. When you see this, see price was coming from here, made the first touch, second touch, third touch, and it came down. Then price tested that previous support, wanted to turn into a resistance and started coming back. Basically, if you calculate the retracement from this to this will have been a 61.8% retracement. Don't worry about what that means right now or how to calculate that. I will show you all that in the Fibonacci. So this is about 61.8% retracement now. So you set your sell stop once it breaks this place and start coming down. You set your sell stop somewhere around there. Sell stop, then start coming. Boom, boom, boom. You can see it's actually retested again. Don't worry. Imagine setting your sell stop here, putting your stop loss here. Your stop loss is tight. You don't have a problem. Even if you lose 4 of it and you still win 1, you still remain profitable. See, please, forex is not about being right. It is not about proving any point to yourself or to anybody. It is about staying profitable. Oh, I don't know. Every time we have classes, they always decide to play with my feelings. So anyway, I'll continue. We don't have videos on, so I'll continue like this. So it is not, don't bother yourself. You don't need to prove anything to yourself or say, I want to be right. No, just flow with the trend. Be a trend rider. Just do whatever the trend is doing. So when you fail or when it fails you, don't worry. Don't put your emotions immediately, instantly. If you are not attaching emotions, instantly, if you see another trade setup, go in without fear. Except a day like yesterday, that was NFP. NFP is a major news event, first Friday in the United States. That's a non-farm payroll. So it's an unemployment event that actually affects, has a drastic effect on the forex market and the stock exchange market. All right, so let's go on. So that is triple top. So you can see triple top bottom, it is inverse, opposite. So I believe we understand that now. Double top, as I said earlier on, instead of the 3 tops, we have just 1 top. We have just 1 top. And I don't know if you're noticing these blue boxes. Support and resistance is playing a key and major role in this thing. You can see right here, it tested that resistance a little bit, slightly, then started coming down again. And see, when you're in a trade and you get to the next support and resistance and it starts testing, do not fret. Don't be afraid. As long as you are in profit already, just move your stop loss to entry, maybe a pip or 2 into entry, so that even if it decide to take you out, it will take you out with maybe 0 point something cents and it won't put your account in negative. So that is it. Hold on, let me turn on the, they've taken the lights. I need to turn on fan. So that is it. If you can actually see, assuming this is a trade we are in, what's wrong with my mouse? Assuming this is a trade we are in, you will see that from here to here will have been about 25 pips or 20 pips, and that is the ideal sweet spot for take profits most times when you are trading currency pair on 15 minutes time frame. Yes, and just another thing, except I'm trading personally, that is when I go to maybe the 1 hour time frame, 2 hours time frame. But for this purpose of the group trading and the team, I trade on the 15 minutes time frame, 30 minutes max. So just so I don't give too wide stop loss. You know, the bigger the time frame, the bigger the profit and the bigger the risk. So that is it. You can see a clear support and resistance right here. Right here, you can establish a clear support and resistance. So if you see price playing around right here, when I show you guys the flag, you will see this is actually forming a flag. So let's say I started selling from here and I see this formation. All I'll do is I'll just establish another rectangle around there. It's a flag. And I'm waiting for the breakouts. And I'll just ride my profits all the way down. So even you can see, let's assume this is TP1, this is TP2. And this place will have been about TP3. But after I go to this place, you can see another support and resistance. Another, see, a previous low is here. A previous high is here. You can establish support and resistance right here. That will be your TP3. So when it gets to this place, is either it actually touches the TP3 and take us out in profit, or it gets close, and once you spot a reversal candle, you start leaving the trade. Simple as ABC. So let's say we now get out of the trade here, and that is why when you master forex trading properly, sometimes when I give a trade on the group, after the deal is done, I'm still in that currency pair, I'm still trading, but you know, I don't have to keep putting out trades for people. I don't need them to get used to having so many trades, because it's actually bad for people who don't have a grip on forex trading yet. On a losing day, on a bad day, it can destroy their account. But on a very good day, which is more, which you have more of that, it will keep building their account. But I don't want to teach them about leveraging or anything. So you can see, let's say we were in this cell and I got to this point. Guys, in as much as this is a theoretical class, I will keep putting in practicals, because what you listen to me say, you will remember. So I got to this point now and I spotted this drawing. Boom, 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 boom. This is an harmonics pattern. Then I know this thing is still going to sell back to the previous supports. Okay, I finished the harmonics pattern. I finished trading. Then what are you guys saying here now? What are you guys saying?
Head and shoulder.
No, this is not a valid head and yes, this is head and shoulders. This is shoulder, head, shoulders. But what else can you see? Looking at this bottom.
Area of support.
Triple bottom.
Yes, you can see triple bottom. You have the first bottom here, we have the second bottom here, we have the third bottom here. We can see heads and shoulders. The more you try to look inward, sometimes we spot 3 different patterns, this chart pattern on the same spot. That gives us a valid confirmation that this thing is a sure buy or a sure sell. So if you are to go by heads and shoulders, let's go back to the rules of heads and shoulders. You can see heads and shoulders now, sorry, inverted, heads and shoulders. So heads and shoulders now, you can see the market was actually in an uptrend, then it reversed. So let's go back. Let's go back. Triple top, it reversed. So now if we see, where is that chart? Guys, where were we? Double top, yeah? Okay, fine. So if you see heads and shoulder here, does this look like a very, very, very good spot for a reversal? Or where is it coming from?
It's not a good spot because it's just in the middle of the chart, isn't it?
That is it. And the trend is even coming from up. It's coming from up. The trend is even coming from up. Yes, it is reversing for actually, what's it called? A buy. But at the end of the day, looking at these parts that actually came down here, doesn't really, I won't really go for heads and shoulders, because it should come from here. It should come from here, not from the top. So that will invalidate me saying this as head and shoulders. What I will see here is triple bottom, 1, 2, 3. So after it actually performed this magic, we'll still be hopeful. Our stop loss will have been somewhere here below the lowest low, somewhere here. It's not getting there. It will come out. But at least even we don't trade, that is why it's good to wait for the breakout. Remember, you wouldn't have entered this because you saw first bottom, second bottom, third bottom. Just entered in the rectangle. No. You will have waited for it to do whatever it wants to do. Then come here, break out, retest, then you buy from here. As you can see, it got back to the other resistance, the next resistance. Then assuming this chart is extended, you still see it get to this resistance. So you can see how all you need to do is understand all the principles that guide every single pattern. Know that when you see heads and shoulders, if it is not coming from under, then coming up, then reversing back to under, then it is not heads and shoulders. This, if this was inverted heads and shoulders, we have a good trade. So me saying this now and treating it as head and shoulders, I will only be messing up myself. I will only be messing with myself because I can see clearly that all the rules of a clean head and shoulder is not for me. Even if what my gut in this life is telling me this trade is a buy or a whatever, I will not still go into that trade because I don't have the right bias. All right, guys. So that is that for triple top. All right, triple bottom you can see is the same, and see, boom, boom. It can take forever to form the second bottom or immediately or whatever. Don't look into that. Don't stress yourself. Look at this. We have a triple top here. 1, 2, 3. We have a breakout, but it didn't break out fully. It got to this point. But saying this is not really sharp. It's not really looking good to me. I wouldn't have taken it. So look at this. First bottom, second bottom. We have a breakout. And sometimes it won't retest. You have to know that sometimes it doesn't retest. So when you're waiting for a retest and it doesn't retest, most of the time what I just do is I leave that trade. I just let it go. Because it is clear that there might be, not all the time, but just look at this. See this candle. Can you look at the whole screen? Have you seen any candle that looks this long? Have you seen?
Yeah, not from the last one.
All right. So that when there's no retest, when there should be retest, those are the things that happen sometimes. It is a clear, clean-cut manipulation in the markets. There is probably inflation and the central bank is trying to pump in money or something, or the market makers are trying to do something major. They have the right to do it. They have the power to do it. So we are the small guys. So we have to understand that there are sometimes it takes some decisions. If you are smart, then you don't let that decision mess up with you. Just let it ride. Just let it slide and move. So that is that. You always get a better trade. All right, so let's go into the continuation patterns. As I said earlier on, guys, there are still some other patterns that are not in this slide. Don't worry, don't worry. As time goes on, as you understand these patterns, individual patterns, by the time we start looking into all those other patterns, it will be very easy for you. Even I might not even need to teach you anymore about those ones. I can even just send you a video or slide, and it will be a no-brainer for you. So now we are talking about continuation patterns. Continuation patterns. This is my favorite pattern, the symmetrical triangle. I so much love the symmetrical triangle that I can actually put all my money inside the trade when I spot a very good symmetrical triangle. That is not saying you should actually do that. That's my own way of exaggerating when it comes to what I love. So look at this symmetrical triangle. As I said earlier, this symmetry is when you split something into two equal halves, you see a duplicating image. I will illustrate with I will explain with the illustration. See, you can see this trend line. You can see this trend line. It's like mirror image. It's like the same slope, the same. I don't know if you guys understand what I'm saying. If you put a thin line in between, if you put a line in between this now, if you split it, you see that this the same shape here, the same shape here, equal lengths, equal halves. So that is what the symmetrical triangle is just trying to tell you. So this is a continuation pattern actually. So let's say it's coming from up. You can see this move, bam, 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 bam. And guys, I will actually still teach you as we proceed. And I told you we have some entry and exit techniques. I will teach you about the Elliott wave theory. I'm not promising you, but right now I'll teach you. But over time, as I see your progress, I'll teach you about the Elliott wave theory. Don't bother yourself that you want to go and start reading about Elliott wave theory right now. I'm just begging you. I'm begging you. Do not mess with yourself. In forex trading, if you are trying to learn two things at the same time, you will mess one up and it will just be a mess at the end of the day. It will be a waste of time. So you can see we have a 5-wave count: wave 1, wave 2, wave 3, wave 4, and wave 5. So chart patterns generally are always correction in the market. They are always correction. So sometimes those corrections later fail, and sometimes it will just continue. It will give you another wave 1, wave 2, wave 3, wave 4, wave 5 coming down. So, but and sometimes look at this, it's actually reversed, but it will still eat TP1. That is why sometimes when we give trades, it will eat TP1, it will keep going, but because we've moved stop loss to entry, we've actually taken partial profit right here. When it reverses here, it will take us out at entry. But look at this. Who can spot this candle pattern? Who knows which candle formation is this? These 3 candles. Is there anyone who can actually tell us what candle formation this is? Everybody on this call should be able to say what candle formation this is.
Someone is stop.
God bless you. And we are actually seeing that at a support. We are actually seeing this at a support. So when you see Morningstar at a support, it is a clear-cut indication that there is 98% chances that the market is reversing for an uptrend. It is actually going to reverse for an uptrend. Do you know what I would have done? I would have said, okay, guys, you know what? I think we should close our profits and secure our trade. But me, what I would have done after I have made sure, after making sure you guys are out of the trade and there's no risk, or I will just tell you, put your stop to entry if you know you still want to ride. Because I know me, I want to take a 50-50 chance with myself. I don't want to take that 50-50 chance with anyone's money. So I know this should have been a 5-wave count. Wave 1, wave 2, wave 3, wave 4 should have gotten here, then continue selling. But when I see this, is a clean, clear-cut indication of a reversal. Then I'll just do what? I'll put in a buy from here, where this candle closed. I'll put my stop loss here, and that stop might just be maybe 15 pips. Then take profit from here to this point will be about, it might be about 75 pips. Just imagine, I'm risking 15 pips. Even if I use 0.10, that is just $15. 0.10, that is just $15. 0.10, if I can eat that 75 pips profit, that is $75. So I'll just put this. This is a very good risk to reward ratio. I'll put my entry here. I'll put my stop loss below this week. Below, I'll just give it breathing room. Then what did I tell you about when you see clear-cut indication of price action? Something is almost literally certain to happen. It will get to the previous, in this scenario now, it will get to the previous high. Your TP1 will be here, your TP2 will be at the second previous high. If there's a third previous high, your TP3 will be right there. That's what I told you the other time about trend line. Look at this. First touch, second touch, third touch, you can see the market still sold. Look at this now. When you see a clear candle pattern on the support that is telling you is a buy, then just the risk is small. Imagine we've taken almost 50 pips from here to here, or let's say 60 pips from here to here, or 40 pips from here to here. Then we want to risk 15 pips to make another 40 pips. Even if you lose this trade, you just remove that 15 pips from these 40 pips. You still have 25 pips left. But if you win this trade, this will have been 45 pips plus another 70 or 80 pips. You put your stop loss here, you put your TP3 here, and you keep following the trend. Seeing right here, seeing this bullish engulfing candle, I will go in, I will still leave it, I will push it further. I've secured a lot of profit. I will have closed some here. Then right here again, I can go in with another small lot size to see what I can do. I'll put the stop loss below this candle. I know this second trade is just extra. If I lose it, fine. I don't care. I don't really care. At some point, you won't care about losing trades because it will not affect you. It doesn't really matter. So that is why you need to make sure when you are trading, you need to have all odds in your favor. Please write that down. When I say having all odds in your favor, it means everything surrounding your trade, everything surrounding your entry and exit is playing to you, is playing your game. That is why, guys, when I lose trades, because the honest truth is we will still lose trades once in a while. When I lose trades, I'm not bothered because one thing is certain. I'm sure of one thing. Me, myself, I have done my due diligence. I have seen what the market wants to do. It is just simple that probably that is why when we are eating stop loss, it's always very fast. You just see those candles, boom, 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 it's stop loss. Then I'll go to FX book. Then you see it instantly. 3 minutes ago, 7 minutes ago, there's an impromptu news. You see by the forum column, you see it there that has affected that trade. So there's nothing you can do to that. So that is why it's good to always have very good risk. Imagine not using stop loss and a news came out that caused a 700 pip move in the indices market. You literally blow your account before you realize, because you might not even know anything is going on. You cannot just hold your phone and keep looking at your trades now. So guys, that is it. Please always have all odds in your favor. That is why when you are losing trades, you will still be confident to go into the next trade, because your emotion is not even playing. You know it was clear manipulation due to news or whatever it is. You won't bother yourself. So that is it, guys. Symmetrical triangle. It can be a bullish move or a bearish move. Okay. So just know it is a continuation pattern. If it's a bullish symmetrical triangle, it will be coming from down and it will break upwards and keep buying. This is a bearish symmetrical triangle. It was coming from up and it tested and broke out to the downside to keep selling. So that is that about symmetrical triangle. Then let's talk about ascending triangles. Do you remember what I told you about symmetrical triangles? Symmetrical triangles have this shape that when you slice it in the middle, it will give you equal halves. Look at this as ascending triangle now. When you cut this into two, you see it's not giving you the same. The triangle is obviously this, then this flat top. When you cut this will give you, the upper part will give you a rectangle and the lower part will still give you a triangle. So that is the difference between symmetrical triangle and other forms of triangle. Symmetrical triangle is a perfectly shaped triangle. Guys, now again, I'll still go back to that price action illustration I gave earlier on about when price touches a trend line for the third time. You know you get into that trade and put your stop loss below the previous low. All right, let me give you this example. Hold on. Before I go on, please, that is not the basics for trading ascending triangle. But I just want to show you why you always be right with all these chart patterns, because every pattern, every price action trader, Elliott wave trader, they don't actually know. Some of them don't know that everything they are trading is just simple plain chart patterns. They don't know the psychology behind it. They just think, I'm a trend line trader. When it touches on the trend line for the third time, I will buy, I will sell. They don't know. See, look at this. We have an ascending triangle, which is a continuation pattern. It's coming from under, boom, going up, boom, 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 retest, then shoot up. Look at this, coming from under. Ignore this big line. In as long as the last trend is bigger than this whole move, you can see this pole is bigger than this whole move. So we have it coming from under, boom. We have the first touch, it went up. Second touch, it went up. Please, on the third touch, what will you do? Right here, first touch went up, second touch went up. On the third touch, you've established this trend line as I was saying this. So on the third touch now, you know you have a triple top. But because it has not broken out, you don't have a trade. That is why it's important not to jump, do not conclude. You could have mistaken this for a triple top, 1, 2, 3. If you're an impulse trader, you could have mistaken this for a triple top and you'll have acted on impulse and you'll just be shocked that the price will get here and reverse. But looking at this now, I will have established this trend line. That's why I said what I said about price trap. I will have established this trend line. I will have established this, waiting to see what the market will do. If it actually give me a valid ascending triangle. Guys, if I'm going too fast, do not hesitate to stop me. All right. So giving me a clear ascending triangle, you can see. Then on this third touch, what I'll just do is, what did I tell you guys? I'll do. I'll buy from this third touch. I'll buy it to the previous high. This is another trend. I'll buy it to the previous high. Because there's no other higher high I'm seeing right here, I will stop right here. Then I will now go back to my ascending triangle. I will let it break out, then retest. Or I may not even stop. I may just put my stop loss below this point C and let it go up. After going up, when I see it, it starts reversing. It starts reversing. When it gets to this point, I know this might not be, there might not be a continuation. I'll just go out with maybe just 10 pips or 15 pips profit. Do you know what advantage this will give me? In case when the trade reverses back and continues the uptrend, I will have enough profit. I will not be bothered about pullback. Even if it wants to pull back from here to this point, I still have from this point all the way down here. Do you guys remember? My entry is right below here and my stop loss is very tight. Imagine me closing that trade, coming out of the trade and entering back here after the retest. My stop loss will now be here. Can you see how much I'll be risking? That is why sometimes personal trading principles and psychology plays a major role in your profit and loss. We can take the same trade and I win or you lose it, or I lose it and you win it, because you have a different trading psychology. And how do you form your trading psychology? As you proceed, you feel me? As you proceed in trading, as you proceed and grow in trading, you develop a very strong trading psychology. All right, guys. So yeah, I know most educators, most scholars, most traders will tell you teaching with examples and past charts is easy, but teaching with current charts is hard. At least to God be the glory. Before you guys actually decide to come train and learn with me, you've seen my results, and I'm sure that some of you on this call, this is not our first rodeo. You at one time I've probably been teaching you at one academy or the other before now. So that is it. We'll still go into the charts, we'll practice. Then when I analyze now, come from Monday, some of you, if you are free, you can come on chat with me, see me analyze. I'll always organize a session for you guys where you come and see me analyze, we bounce ideas, we go through the market together. We just look deep into the markets. And funny thing, I might be saying something different, I might be the one saying the right thing. Then you'll be the one to correct me. That, oh, bro, this is what is happening. Then I'll look at it from a different angle and I'll see what you're doing. That is the whole essence of this thing. Please, guys, I need you to know that you should be each other's support system and grow together. All right, that is it. So let's move on. So you can see two things is actually playing now. The trend line trading is valid. The symmetrical, the ascending triangle is still valid. So we have better positioning. Let's move on. So you can see descending triangle is the opposite, coming from an uptrend, making the first touch, second touch, third touch. What happens after the third touch? It sells back to the previous low. Then instead of coming out here, I don't have anything to lose. I'll just put my stop loss to entry. One thing about putting stop loss to entry is it gives you the opportunity to ride the trend for as long as it keeps going your way. Because you know you have nothing to lose. If you have a large lot size, maybe 0.50, then as you proceed every 50 pips, you can start closing 0.2. 0.2, 50 pips, that's $10. Go again, another 30 pips, 0.3. That's $15. Another 50 pips, you close 0.2 or 3 again. So then you now leave the remaining to keep riding. You now move your stop loss to your present, to the previous low or the previous high. That one, you make a lot of money clean. Imagine you starting from here ahead of everyone else. Then you put your stop loss right here at point C. You start from point E. Put your stop loss at point D, point C, because you know it is a risk. Trend line trading, price action trading is riskier than chart pattern trading. It's a risk. So you put your tight stop loss be a little bit above this C and you start riding. You get here, you see that it broke that support, but you know it might still retest. What you need to do now is just put your stop loss at entry, few pips into entry, maybe 2 pips. Then you let it just do its thing. If it comes back and hit that point, it will take you out without a loss. It will take you out with maybe profit of 2 cents, 5 cents. So that is that about triangles. So let's talk about flags. This is one of my favorite patterns too after symmetrical triangles. Flag is so simple. The way what the name implies actually is actually what it means. Look at this. Imagine you are holding a pole. Then this is the flag on it. This is the pole. This is the flag on it. Do not forget the pole. This is the flag on it. You establish the pole from the obvious previous low in a bullish flag. Then you draw it up. Then you have your flag. You have your wave inside your flag. So you can see it here. Illustration. Boom, boom, boom. 1, 2, 3, 4, 5. Breakout. Boom, boom. That is your flag. So look at this now. Look at this flag now. After doing this, that I broke out. It didn't retest. Ideally, it should have retested right here, but you know, just watch something. It keeps going, it keeps going, it keeps going, it keeps going. See, you would have taken profit here, then he did all this drama just to continue. But do you know what I see again, guys? Do you know what I see again? I see another pole, I see another flag, I see another breakout retest, and I continue my journey. Do you guys understand that now? Do you guys understand what I just said? Ideally, this trade is over. Yes, this trade is over because it has started. It didn't retest, but it went. It rushed and got. It rushed to this point, and it started coming down. It started coming down. See this supposed to be morning star. This is supposed to be a morning star, but considering the fact that this candle body is not even up to 50% of this, and this is at it is at a resistance. You don't trade morning star at a resistance. Look at a morning star right here at a support. You'll have gotten away with this, but not this. This is at a resistance. You don't trade morning stars at resistance. Even if it's obvious it's going to buy, please just stay away from it. All right. So you can see, then I can see another pole from here, another pole, flag, then another breakout, retest, continuation of the pole. So in a flag, you have the first pole, you have the flag body, you have another pole breakout. And let me just say this, though it's part one of, later we'll be talking about it in entries and exit strategies of every chart pattern. Your take profits from breakout of the flag is always 90% of the time the same length with the first pole. Your take profit after it, not even from the beginning of this pole, the breakout pole, no. After it breaks out, this whole wave here, this whole length will be your take profits. So I believe.
Question.
All right, go on, go ahead.
Like in this pattern I'm seeing right now, I can see A, B. Where is the C?
A, B, C, C right here, D right here, E right here.
Oh, that's the E.
Yes.
So the point where it touches the C.
Yeah,
what if it doesn't touch it then? We can't classify
it
that
as. Look at this D now. Did it touch it?
Okay, it didn't touch, yeah.
So most of the time, even it can have just 3 or 4 touches. So it's just trying. This is just trying to tell you what is ideal. So over time, you get to recognize, even sometimes when you don't have these 5 touches, even if you have 4 touches, it's good to go. So
okay,
yeah, I need you to know that. So someone else will have treated this as a triple bottom. This is not a triple bottom. We have a diagonal support. An horizontal support is straight. You know, we all know what horizontal line and diagonals are. This is the diagonal support. So please do not. That's why I said don't force patterns. Don't fake patterns. Don't deceive yourself. You are not deceiving the market. You will be deceiving yourself. So you fake yourself out and you just lose money. Then you can see the bearish flag is the same thing, the same thing, the same thing. As you can see, before the bearish flag starts, see, I just keep implementing this trend line touch and all because it is what I do. I'm not saying do it. I'm not saying that's what you should be doing. Please, I need you to respect the market. I need you to practice and become very good to a point where you can take some risk. And you will not just be taking this risk. It's just like drinking alcohol on empty stomach. You will not be taking these risks on empty account or an account that has not made profit that day. You must have traded and made some profit that you can afford to lose a little bit out of it. You feel me? So look at this. This is coming out, boom. It made the first touch, came here, bam, first touch, made the second touch, went up, made the third touch right here. I'll just do what? I'll buy it all the way up here. I can see a previous high here. From here, you can see a bullish engulfing candle. Immediately, I even see this red candle close. I will have entered for a sell. Put my tight stop loss below this week. Maybe just 10 pips or 5 pips stop loss. Now imagine me having just 5 pips stop loss to play. 5 pips, just 5 pips stop loss. If I put 0.10, how much will I be losing? Can anyone tell me?
$5.
Yes, you're right, $5. So imagine having just $100 in your account. You can even afford to, on this type of trade, that I see that the risk is very low, but okay, ideally, if it was maybe a 40 pip stop loss now, you might not be able to use 0.5. You might want, on $100, you might want to use 0.1 or 2. No, that would be $4. But now, even if you use 0.10, you're losing just $5. I'll use 0.20. I'll be risking $10 because I know this is a high probability trade and the risk is very small. Now, let me bust your brain. So from here, you enter the trade. From the close of this red candle at the bottom, you put your stop loss. See this place now. You put your stop loss maybe under this D. You give a breathing room, or even here, let's say 5 pips. You went in with 0.20. If you lose this trade, you lose $10. You have just $100 in your account. But if you win this trade, your first take profit here, boom, you close 0.5. Your second take profit at this high, boom, you close another 0.5. Your third take profit at this high, you close the remaining 10.0. Can you guess how much you'll have made? You'll have made over $100, close to another $150 on an $100 account. Yeah, it's very hard to keep up. It's very hard to see all these things play out and work. But guys, trust me. If you can be patient with yourself, if you can give yourself the benefit of doubt, if you can give yourself room to fail, don't be scared of failure. As a forex trader, if you want to be successful, you will not be scared of failure. And what is the failure in forex trading? Eating stop loss. As long as you still fear eating stop loss, you will keep losing. Guys, if not for the group, Telegram group, there are some things I do that I wonder what gives me the sort of courage to do such. It is not based on impulse. It's based on tactics, based on what I know and what I've practiced over time. It's just that the team now and the group is actually giving me reasons to be a little bit laid back. I've started putting little emotions into my trading here and there, not for myself, but for people's account, because I don't know how people feel when they lose. I know they're not used to losing yet. They might not be happy about losing, no matter how much they've won that same day. They won't still be happy about losing. But I need to work their mind frame out of that place first before I can take them on that journey. So when we start trading inside our mentorship club, you will see the kind of trades we'll be taking, the kind of risks we'll be taking. Live trading, just the way we are on this Zoom call, we'll be together on Tradingview. We'll be in the market, we'll be trading together. Guys, who wants to go in? I'm risking 10 pips. Let's go in. 0.50. That'll be $50 for me. I don't care. But if I win this trade, I'll be making close to $500 to $700. So that is that, guys. And as I said earlier on, this is supposed just to be a theoretical class, but no, I won't. This is not a beginner's class. I need to, as we keep going, I don't know what I'm saying right now that will put everything into perspective for you. So keep going. And notice something. These people keep drawing their own trend line through the weeks. Please, I'm begging you, do not draw through the weeks. Don't draw through the weeks. Please, don't draw through the weeks. It's better if we didn't draw through this week now. This would be our first touch, our second touch. We wouldn't have had this third touch, and we wouldn't have gone into this trade at this point. We will have entered at this point, which I believe is safer. Whatever fake out wants to fake out cannot get to this point. So that means we have a valid setup and we ride into the trade. So guys, that is it. So if you missed this, you wouldn't have missed this trend line. Establish this one here. Third touch, you sell all the way down. So that is that, guys. Let's go. So basically that is all patterns in this book. So what we do now is we start with my favorites, because I think we've spent so much time. This is 1 hour 25 minutes already. So let's put it to a vote. Who wants us to go into the market and practicalize, or do you want us to pend it till tomorrow night, or you want us to just go over the symmetrical triangle, even if it's just the symmetrical triangle, and do something about that? So let's put it in the chat box. Put in go if you want us to go into the trading view. And if you don't want us to, just put no. Go or no. Go or no. Go or no. If you want us to go to trading view, put in go. If you want to leave, put no. We have 8 people. So, okay, we have 3 goes. So far, so good. We have no. So, if we don't get any answer right now, I believe others want to continue. If you're tired, you can go get some sleep or rest or whatever it is. But I believe it's very important to stay on this call. All right, let's go. And I promise I won't take your time. This is 10:25. Max, 11 o'clock, we are done. Max, because as I said, I'll just be showing you this symmetrical triangle. All right, so let me stop this and share my trading view. Man, sleep, I'm going to sleep this night. Only God save me. All right. Just a minute. I'm trying to locate my desktop. I have so many things open to my browser. Okay, so can you see my charts? Can you see my chart? So in this training, most of my practicals, I'll be doing it on the UK 100. You need to sleep. I don't want you to break out. Don't worry, I won't break out. Don't worry, and I won't break down. We are done. In 30 minutes, we are done. Okay. Thank you so much for your concern. So, but this is my job. I need to do my job. All right, guys. So I need you to see this UK 100 setup. I need to see this UK 100 setup. Can you see what I did? This is a bullish flag. Anyway, this is a bullish flag. This is a bullish flag in so many ways. See, I established the support here. I established the resistance. Then price was here. Then I tracked price with this channel. Remember the channel 2? Do you remember the channel 2? Literally, what someone else will have done is try to draw with a rectangle. Yes, I was there at a point. What I would have done is take the rectangle 2, and I will have done this. I will have done this. But looking at this rectangle 2, it doesn't really give me so much perspective, and I'm not really seeing so much data. But when I take my channel 2, I do this. It will help you make sure you draw and add a very, very correct and accurate channel or whatever you want to draw with it. So let's take our part 2 now. Can you see the part 2 on my favorite list? I don't know if you can see my favorite. I'm moving it around now. This is my favorite. Then let's take, you can remember I took the channel 2, parallel channel. Then now I want to take my part 2. My part 2. Then you can see coming from here, this, retesting, breakouts, retest, boom, end of story. I will explain this later move, the breakout and all to you. But I need you to know something.
Sorry, can I ask a question?
What question is that, please? Go ahead.
Yeah, what difference does the triangle and the other one you use, what difference does it make?
Triangle?
I can't really see. Not the triangle, sorry, the
rectangle.
Yes. What
Okay.
difference does it make?
Let me put more life into this. Let me put more color into this. As I said earlier on, I'm a very minimalist person. So I'm a minimalist. So I don't really like so much colors. I don't like so much drama. I like to just keep things simple when I'm trading and everything generally. So you can you see it established now? Can you see the highs and the low? Can you see the box itself? Yeah. But can you see a dotted yellow line in between? Let me go change that the yellow line. Let me give it a full color. Can you see it now?
Yes, I can. Yes.
That is actually establishing 50% of the channel. And if you observe something, at every point, you still have touches on the 50%. Right here, We have resistance playing. It was tested here actually. It broke back down. The resistance on 50% was tested. It was tested here too. It broke out, came back here, boom. But after breaking out and with this major move, it turned this 50% into a support. Can you see? A support. So many candles leaning on this. It tested it with a wick, which could have faked so many people out into some other trade. But look at this. It continued up, then came out. The 100% now is turning into a support, tested it, and is breaking out. So that is just what this channel is actually doing for me. And when I want to draw flags, it makes it easy for me to be able to establish a flag. I don't know if you understand that.
Yeah, I don't know. Thank you.
All right, no problem. You're welcome. All right, so let me just leave it at that. So now you can see this bullish flag now. You can see this pole right here. So let's calculate the length of this pole. From here to here, that is 1,107. So what I do is, you know, we don't own the foreign exchange markets. We have to always give room for margin error and so many other things. So this 1,702 pips now, in my mind, I'll see it as 1,100 pips. 1,172, I'll see it as 1,100. I just give out some back to the market. So we've established our flag and we're waiting for price to break out. So we'll actually backtest. Okay, let's do this. Let's do this. Let's do this. Before moving on, let's just put a backtest. Oh man. So at this point, can you see what the market is doing? But we've actually drawn our flag out. We are expecting it to do whatever it wants to do. At this point, if you see this as a breakout and you jump into it, you might be risking so much. So just let it play out first. You see this breakout, see the retest, it came back down. That means the flag has not completed its move. So let's just go on. Before drawing this as a flag, I've changed it to a rectangle. So now let's play it. Okay, hold on. Before playing it, let's establish the paths. Let's establish the paths. Market is currently doing this. This is actually also a triple bottom, but so many things will be put into consideration before considering it as a triple bottom. So yeah, we expect the market to get here and break out. So now, you know, I said something about 5 wave counts, which I said I'll be teaching you later when we are done with chart pattern. In total, not even midway or something. Because if you can understand chart patterns to the core, by the time you start using Elliott's, man, people will ask you, how come? Are you a wizard? So this is a 5 wave count. And what does it simply imply? We have an impulse, we have correction, we have impulse, we have correction, we have impulse. All right, that is the 5 moves the market make. And it corrects. When you see chart pattern, it's just correction. When the breakout happens, you are seeing an impulsive move. So let's put everything into perspective now. After the wave 1, we calculate the remaining. So let's go. I know I said we'll talk about a bullish flag, but since we've seen symmetrical triangle, symmetrical triangle, since we've seen a flag, let's just talk about flag. You can see right now, I'll be waiting. Yes, there's a breakout. And at the breakout, you can see a bullish engulfing candle. Yes, it's at the resistance, but we are expecting a breakout. So it is telling us the market is still going, but we don't need to jump into the trade. Let's just wait and see it play out. Okay, guys, do you know that I didn't put a ruler or any indication to establish the end of that point 1? I didn't. It just happened that I guessed where it should probably get to, then I was right. Okay, fine. Let's keep going. Now it's trying so hard not to reverse. You can see all the indecisions with the dojis. You can see wicks. You can see price action at the resistance. It's crazily testing that point. You can see it still go out again. It keeps doing the same thing. It keeps doing the same thing. You see, at this point now, the price action has gotten back to this point one. Even from this bullish engulfing candle I've seen, I will have gone into the trade. Price action has gone back to point one. So what do? Let's now establish our point three for accuracy's sake. We start from here. Yeah, don't bother yourself about all this drawing. You know, I didn't actually, when I drew this 0.32, it's not as if I've measured it before, but it's now a second nature to me measuring, using my eyes to measure where point this would be, point that would be. So this will be our 0.3, obviously. So that doesn't mean it will be 100% right. It might be a few pips away or a few pips further than that. So let's go. You can see so many indecision, and the market was really slow. The market was really slow. But one thing is constant. At this point now, we are already slightly in profit. We are already in profit, good profit at that. We are already in profit. We are already in profit. We are already in profit. We'll have put our TP1 right here. TP2 will be somewhere around here. We've hit TP2 now. We've moved stop loss to entry. Our entry is here. Our stop loss was here. So let's pause. Let me establish something. So can you see at 0.3, the market has started reversing again. You can see this reversal candle. The market has started reversing again. It will reverse to 0.4, but ideally, this is where our 0.4 should be. Hold on. Our 0.4 should be at least 38.2% retracement of 0.3. And can get to this point, but no more than 61.8% retracement, but because it should not violate the 0.1. So let's go back here. I know it seems like I'm rushing. This is just a bonus session to the summary of chart pattern. We still treat symmetrical triangle as a topic. I just want us to have something to go think about and sleep over. So let's continue playing. I've established that where the 0.4 will get to. You see, it's going below. You might want to get to the 68.1.8 retracement. It didn't get there. Can you see? It only went a little bit lower than 38.2% retracement. You can see it's still going. Wave 4 is complete. We are on our way to wave 5. And the crazy thing, the funny thing is, don't let me say crazy thing. Inside wave 1, 2, 3, inside wave 1, 3, and 5, you still have 5 waves. Look at this. It's just so funny when you understand how the forex market works. It becomes so. Whoa. Are you guys there? Is anybody with me?
Yeah, I'm here.
All right,
Yes.
just a second. I don't know what made that move. I don't know why that move. But okay, the market has gotten to where it stopped actually. But this is where we are expecting it should get to. But ideally, we will have taken our profit from this place and we are gone. So this is what I will have done. Assuming I wanted to go into this trade from this point. So this will have been my entry. My stop loss will be 50% of the channel. My take profit, highest take profit will be slightly. How many pips was the poll? Let's go back to the poll. That will actually put things into perspective clearer. See, 1,100 and something the other time. Yes, 1,100. Let's just say 1,100. So from the breakouts right here, 1,100. What am I doing? So 1,000 pips. Where's 1,000? 1,100. Yes, 1,100. So we assume that that's where market will go to. But the funny thing is, I don't always trade wave 1. You will still understand all these things later because wave 1 is always the breakout wave. You can see it's the wave that broke out of this channel. Wave 2 will retest that channel. See, this is the reason why chart pattern is so sweet because it is human nature. What affects the movement of the market is human emotions. And humans, they take 3 steps forward, 2 steps backward. 3 steps forward, 2 steps backward. 3 steps forward, 2 steps backward. Check it. That is why FBI and so psychologists and all these people that think they read mind or they can predict what people will do next is because they try and go, they go back in time and try to examine the pattern the person has been following, they know the person will repeat that pattern. So the market from the beginning of time, as far back as 18th century and the likes, when it was just paper and pen to calculate mathematics, Fibonacci ratios, and so many other things, it has been this way, and it will be like this till end of time. So look at wave one now. Wave two, we enter the trade. We are risking, see, 230 pips to make 800 pips. 800 pips. 800. 230. That's a risk to reward of 1. When you risk 1, you gain 3.5. So that means if you risk $100 on this trade, you'll be making $350. Look at this now. Then I'll use my Fibonacci retracement to take my profits even before the market play out. I will know where my TP1 is, TP2, TP3. This is entry, this is it. Can you see this? At 38.2% retracement, what can you notice? What can you notice here? Can anybody please tell me what you notice right here? At that point, what do you notice? At 61.8% retracement, please, what do you notice? And at the 100% retracement, please, what do you notice? Can someone please unmute him or herself?
Yeah, I just noticed that the 38% is at the same level as your 0.4. And is that what you're looking for? I don't know.
Apart from that, what else do you notice?
Nothing else.
Okay, let me do it this way. Maybe that is not actually making things clearer. Looking at this place, 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 what do you notice? There's a PLZ, potential reversal zone. And what does PLZ simply mean? Support and resistance. That is how I can simplify PLZ, because potential reversal zone is any point the market will get to and it's possible for it to reverse or break out. So look at this place. There is a support and resistance that was formed. Do you know why we'll have taken profit here? Because after the market broke out, it will still come back to retrace it. The market moves in 3s and 2s. There is 5 waves inside wave 1, 5 waves inside wave 3, 5 waves inside wave 5. So this is it. This is the first wave inside wave 3. This is the second wave that came down. This is the third wave. This is the fourth wave. And this is our fifth wave. That is why it's important to take profit right here. Even right here too, it's important to take profit. And your last profit will be at the end of wave 3. So don't worry, you understand all that later on.
Yeah,
So
because for me, I don't understand it.
Yes, no, don't worry, don't worry. I don't want to. Why I'm saying all this, I keep saying this thing. I'm just saying all these things so that in time, when I now say something, you now remember, oh, this is what radio was saying at so time. Now I understand. That is it, guys. So right now, you can see with just the recent trade I took in the market, which you actually saw on my charts when you got here. You can see I've been able to show you the simple basics of chart patterns using a bullish flag as an example. It can potentially get to 0.5, but I am not predicting it to get to 0.5 because look at this place. We've established a resistance right here. Look at this candle. This is a very serious bearish engulfing candle. At the resistance, at the highest high, for that matter, see. Let's go to the 2 hours time frame. You can see. Let's go to the 4 hours time frame. You can see as far back as October, as far back as August, as far back as June. See, June price was not even there. As far back as last year, 2018 December, price has not gotten to that point. I went back in time to actually go check. Over time, you know the importance of timing and history in the markets. So now I can categorically say that in a very long time, this is the highest high. And you have to know that right now, this is where news play a very important part in trading. Right now, Britain is is in the midst of Brexit. They are in negotiations with the European Union, and there is still recession, and the pandemic is looking like it's coming back for a serious second wave. Then if you are seeing market at its peak at the highest high, yes, I'm not saying it will not still go up. I don't care if it's going up, But what I'm just saying is there are possibilities that, and all indications that the Great Britain pounds might fall, that the FTSE, that is the another name for UK 100, that it can still fall. The FT stands for One News Agency and the SC stands for Stock Exchange. So I'll remember the full meaning later on. So you can see it's looking like it will fall, because obviously in a recession everything falls, and this will be no exception. So in recent upcoming days and weeks, we'll be looking to sell a lot of UK 100, a lot of UK 100. I'm just hoping. No, I don't even need to hope. Let it do whatever it wants to do. But at the end of the day, we'll be victorious. So speaking of the current market price and speaking of patterns and how you can spot patterns ahead of time, let me do this just to give you an insight into what I look at when I'm trading. So look at this. Who has a question? We're almost done. In 2 minutes, we'll be done, in 5 minutes. Yes, Financial Times Stock Exchange, thanks. So you can see this resistance right here that has been established, though it has been tested with weeks. That will affect someone else out. That's the importance of break and retest. That is the importance of break and retest. So this is telling us one of two things. This is telling us one of two things. There's a touch here, there's a touch here. You might still want to go for more touches to get to this. You can see this white line I have up here. It might still potentially get up here. I don't know. I don't have to be right. It's just, forex is not a game of prediction. It's a game of possibilities. So you can see we have our touches here. First touch, second touch. The third touch right here on the resistance is going down. What I would do when the market opens, I'm not saying you should do this, please. It's a big risk I'm willing to take. I will just put price here. I'll put my stop loss right here. A little bit breathing room. 280 pips risk. That's $28 for 0.01, which I don't actually mind. I can even go with 0.02 for about $56 risk. Then I'll do this. That's 1 to 2 risk to reward ratio. 1 to 2. You can see I'm risking 280 pips. I want to make 580 pips. Let's just say 580 pips. So it's a very big risk, and which in turn, what am I even saying? This is it. This is it. Potentially, because we still keep having lower lows and lower lows and lower lows, previous lower lows. Even if I want to take it, okay, guys, we'll do this on Monday. So whoever is interested, you can fund your account and be ready to take the risk, because forex is all about risk. The higher the risk, the better the reward to the risk, the more profitable you will be. Imagine winning just this trade in over the course of 2 days. We have 3,000 pips, risking 300 pips. That's 1 to 10 risk to reward. 1 to 11 rather, risk to reward. 1 to 11 risk to reward. But we need to be extremely patient. Extremely patient. What we do is, when we start from here, we put some TPs. Let me establish. Let's say we go in with 0.3. 0.3. Can you see the 38.2% retracement? Where can you find it? This resistance. Can you see right here? We have price action. Let me delete this. I think I have my setup already. You see the place of analysis and teamwork. I was showing you guys something else, and I started saying something else. Can you see? And always remember, support and resistance is a zone. It is not a line. Support and resistance is a zone. So you don't need to draw it in line. Just establish the possibilities. So we have our 30.8% retracement here. I'll share this with my team. So we just give it breathing room. We don't own the market. So let's put it at 64.50 for the TP1. But guys, the minute this thing gets to this point, we move stop loss to entry. The minute it moves a little bit down, immediately it moves like this point, this previous low, we put stop loss to entry and we just forget the trade. Do you know the advantage of putting stop loss to entry? Can someone just tell me if by now you understand what putting stop loss to entry will do for you? Can you just share with us?
It means you have nothing to lose.
God bless you. God bless you. It means whatever the market likes to do in this kind of scenario, because apart from trading and I don't like going out. So most of the time, what I do is if I don't have job or outside gig, I'll stay in my house. Apart from trading, after I put alerts in all my trades, I'll turn on Netflix on my monitor. I'll start watching, or I'll take game and I'll start playing games. So this one, I'll just set it. I'll put stop loss to entry. I'll put an alert at every point. Then I'll just forget the trade. I won't even look for another trade setup. Imagine we are expecting 2,000 pips. Sorry, 3,000 pips profits. Guys, we are expecting 3,000 pips profits. And you want to tell me I need another trade setup? Do you need any other trade? Is anybody here?
Nope, you don't need any other trade.
You don't need any other trade. You have all you need for the week. You have all you need for the week. So what you need to do is when you now see that you are seriously in good profit, you keep moving your stop loss forward. You keep moving it forward. You keep trailing your stop loss. When you get to TP1, out of your 0.3, you take up 0.1 outrightly. Remaining 0.2, you put your stop loss here. When you get to TP2, you take out another 0.1, you put your stop loss here. Remaining 0.1. The remaining 0.1 will write to the bottom. So this is potentially over $400.
Can I ask a question?
All right, go ahead, please.
Yeah, the peak where we're trying to where the UK 100 has gotten to, is that the highest peak for how long?
Okay, let me show
Well,
you.
we think potentially that it could,
Yes.
drop. You know what I mean?
Because actually, before I took my last trade on it, I've gone back in time, and I think the last history you get is in May or something, or Jeremy. I don't know why they don't always show a lot of history for indices. But I think when I upgrade, if I upgrade my Tradingview to the Pro whatever, because I'm just using the Pro plan. So you can see as at we can see back in time till May. Can you see any points getting to where the market is right now? You can see this green dotted line. Market has not been in this.
So we're currently at the highest point so far there.
And you can see the way market actually moved from November. Look at this. It took it just November to make this move till now. But see how market has been struggling since after COVID. Market has been struggling to go back up. Look at what happened back to the economy. The market came down. I wish we can actually see the previous history. I do see it. I think it was when I was still using the Pro plan or something, or Pro Plus plan. So market actually fell big time. Then they started struggling to take it back up. They started struggling till they got to this point, and it actually did well. It started going up. Then you can see the speed it went up with. You see, when something happens with speed in the foreign exchange markets, it has to correct itself at least 50%. I'm not saying the correction will start now. I'm not saying this trade setup will actually work. But if it works, I'm willing to take the risk. If it works, then it's good. All well and good. If it works, it's good. How many pips again? So can you see we don't have any high in recent time at that point? So how many pips is the risk again? Let me reevaluate. 300 pips. With 0.01, that is 30 pips. With 0.3, that is 90 pips. I don't mind risking $100. $100 to make $300. I don't mind. I don't even mind. I don't. What am I even saying? I'll be able to make more than that. I'll be able to make more than that. So that is it, guys. That is it, guys. I believe at this point, I don't have to keep you guys waiting for long. I believe we've come to the end of this class. Thank you so much, guys, for your patience. Thank you for paying attention and giving me the opportunity to do this. I really appreciate you guys. So please, as always, I'll have this recording uploaded and I'll send the link to the group. It might not be today, it might not be tomorrow morning, it might be in the evening or even on Monday, because I have a very, very tight weekend ahead of me. And yes, I believe gradually, you guys, you'll be able to finesse everything and you'll become really, really extremely good. Forex trading is as simple as ABC. All you need to do is understand what is going on in the chart, with the chart. So, and that is it. You are good to go. All right, guys. So is there anybody, do you have any question? Just briefly, 1 or 2 questions. If not, then let's just call it a day. Let's call it a day.
Not really a question.
Okay.
It's just it's not really a question per se, but just to ask for the UK 100.
You're welcome, Bolaji and Evelyn. Go ahead, please.
What's the funding like? If you say go fund your account, like what's like the average?
Okay. Basically, do you know what I would do with this trade? What I would do with this trade is I'll move about $150 or $200 to a new Ugoswe account. I'll go into my Ugoswe back office. I'll create a different account. I'll put in the $150 or $100 there. I'll calculate my risk. I know this $100, $150 or $200. I'm willing to risk the whole thing. I'm willing to lose the whole thing. So because the funny thing is, market might just retest to this point and start going back up. But as long as we keep trading stop, we will still remain profitable. It is not our profit. You cannot control how much profit you can make in the market, but you can control how much loss you can make in the market. Because now I know we can't afford to lose more than this. 300 pips. So if you fund your account with maybe $200, I'm just speaking for people who don't really have large accounts, because that is why I mastered the UK 100 and France 40. It enables people who don't really have large accounts to be able to trade indices. So, and the risk is minimal compared to NAS 100 and UK 500, US 30. So that is it, guys. 300 pips risk. If you use 0.10, that's $30. If you use 0.10, that's $300. So if you risk $300 here, you will make $3,000 if it hits. I can actually, why I said I'll create a different account is I can actually leave this trade to keep going on and on and on and on for a week, for 2 weeks, for 3 weeks, for 4 weeks, for 5 weeks. I've given the account that $300. But the minute the trade gets to pass my entry and gets to this point, I'll move stop loss to entry and I'll forget it there. I'll just set alert to keep reminding me as it's moving. I'll just forget it there. So that is it. So if you know it's a risk you're willing to take, even with just $100, you know that you just use 0.01 and you know you're risking $30, you're expecting $300 profit. So that's it. If you use 0.03, you're risking $90, you're expecting $900 profit. If you use 0.05, you're risking $150, you're expecting $1,500 profit. So even if you don't wait for the $1,500, when it gets to maybe $200 or $300 and you even go out of the trade, is actually really worth it. But this point will be very, 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 very significant to this trade setup. This point will be very, very significant. This point we have one impact, then this will be the next most significant point. So that is it, guys. We are actually 2 hours into the class and it's been an amazing one. Thank you so much. Once again, this is Radio, and I'll see you guys in the next class. If you have any questions or anything you want to talk about.
When is the next class, sorry?
I don't know. I'll see if we can pick something for tomorrow or Monday. So, and always remember, mindset is important to trading. I have my personal issues. I have so many things going on in my life, just the way every one of us on this call have it. But anytime you want to go into the market, just put it by the side. You can always go back to it. Please don't let that be the reason for you to want to over leverage. Overnight money will destroy your account. And if you have any personal, not too personal, but anything regarding business or whatever that is actually weighing you down, distracting you, or not letting you concentrate, if you need someone to actually talk to, about it that can advise or help you get over it to trade properly, you can always message me, talk to me, because my job is not just to fix your trading, also to fix your mindset. Because if your mindset is not 80%, no matter what I teach you or show you, it won't work. So guys, always have that at the back of your mind. I'm someone you can always access and talk to anytime. I believe some of you know that about me already. So thank you so much once again, and good night. Bye.
Thank you.
You're welcome. Bye-bye.
Bye.